Hi, this is Stephen from Share Navigator. So now we're going to look at share buybacks in terms of our historical research. So, what are share buybacks? That's where a company uses some of its retained earnings to actually go and buy back their own shares. And it's another way of rewarding shareholders, actually, because if you think about it, by reducing the amount of shares on issue, actually, there's more profit to go around for each share that's outstanding. So it's a way of actually rewarding shareholders, and it's also a vote of confidence by the board of a company that you know what they believe that the share price can actually go up. So there's a number of benefits to it. One thing I would like to highlight before we go and show you where you can get share buybacks: if companies are only increasing their earnings per share by share buybacks, I think over a period of time, that's not positive for the company because really what you want to see is the company growing its top line growth. In other words, sales growing for their services or their products. So just have that in the back of your mind when you're looking at share buybacks. Is it the only way the company can actually artificially increase their earnings on a per share basis? So just remember that. So I'll show you now with Alaska Airlines where will you actually go and get the share buybacks. We go to the financial sections again. We'll go to the statistics page again and click on annual. And what we're looking at here is the total common shares outstanding. In 2017, there was 123 million shares outstanding. Fast forward the clock, there's an extra 3 million shares. So that means that there was an extra 3 million shares issued. So in fact, actually, you know what, the company did not reduce their share count. They actually increased their share count, but it wasn't by a significant amount. So we're going to transpose that information into our PowerPoint presentation. And what I'll focus on here was kind of pretty stable here actually until COVID. And then obviously the company probably had to issue more shares in order to finance its business um, throughout the lean COVID years as such. So they would have used a combination of share issuances and actually increasing their debt levels, to keep the show on the road as such. But what we can see is there is evidence in recent times that actually they've started to buy back their shares. And in fact, if you go to the company reports, so go to the investor relations section of Alaska Airlines, go to company reports, and you will see that they've announced a share buyback scheme. So they're actually in the process here of reducing their share count. Now, this is very important. If you think about it, if we're going to start valuing a stock based on future sales estimates, well, if the company is reducing the shares on issue, that means there's more profit and sales per share to go around for each single share. And that can have an impact on future valuations. And we discussed that in greater detail in the next course, which is the three ways to value a stock. And it becomes important then. So right now, this is neither a negative nor it's a plus for Alaska Airlines. But what I will say is that I do know from having done some research that they have announced a share buyback program. So that's a positive. So net, this is a positive for Alaska Airlines because they are back on track to buying back their own shares, which increases shareholder value. But always remember, we much prefer top line growth when it really comes to the growth and profits of a company. This is a nice to have added on bonus, but we much prefer top line growth, and it's always best to remember that. So finally, we're going to just discuss in the next video, well, there's other things to consider when you're looking at the historical research of a company. There's mergers, there's lawsuits, there's all different bits and pieces there. And we're going to show you a very easy way using the TradingView platform to actually go back over time and have a look at some information on lawsuits and mergers. And you have to weigh that up. So the first thing I will say to you is just because a company has a lawsuit, doesn't mean it's a negative for the company. If you're a publicly quoted company, there's a good chance you're being sued, especially in America. So that's not unusual. And then mergers as well, sometimes they're good and sometimes they're bad. So you do have to analyze those as well. Mergers are notoriously difficult to integrate cultures and companies. So they're not always good, especially for the company that's acquiring another company. So we're going to show you in the next video how to go about researching those.